Okay, traders, welcome back. This is a requested video from somebody on the channel. We're going to be going over crypto and how you can apply order flow and ICT to crypto. So this is the Bitcoin 4-hour chart. Now, as you can see here, we're on the 4-hour time frame. So we start our analysis on the 4-hour time frame. So in this video, I'm going to be going over how you can use ICT concepts to form a higher time frame bias, to then also go down on the lower time frames and use order flow and ICT concepts to validate your entries, right? So does order flow work on crypto? The answer is yes, and you're going to learn just how powerful it is on Bitcoin, Ethereum, and other crypto markets. So let's get into it. So the first thing we look at, if we just dissect the charts, is we're looking at our market structure, right? Market structure is the first thing we look at. So if we take a look at the basic market structure over here, we're just going to be dissecting this and analyzing that we have a structural low down here, and we have a structural high over here. This is our 4-hour dealing range, and that's the second thing we look for, right? So the second thing we look for is the dealing range, right? I'll just write DRT or dealing range theory, right? Very, very basic. We're just projecting a Fibonacci to from the swing low up to the swing high. And now we have our 50% level over here. Anything below is a discount. Anything above is a premium. So now we're looking at PD arrays, right? PD arrays are very important, right? Because you're going to understand PD arrays. And number 4, for those who've been watching my previous videos, is fair value gap. So these are the 4 most important things you need when analyzing a higher time frame chart. Now from here, we're going to be understanding where the fair value gaps actually are. So we have a fair value gap resting over here. Notice how I always look, okay, I just want people to understand this. I always mark the candle before because this is the fair value gap, right? It is this, that's the fair value gap, right? We simply mark the candle below that because we are looking for price to enter and fill this fair value gap, right? It's as simple as that. So we have a very, very clean wick rejection over here. And we also have a second fair value gap over here. Following the exact same logic, we have a fair value gap resting over here in this region. We're just going to use this buy to sell wick region. And as you can see here, price tapped into this fair value gap before heading higher. So when it comes to a higher time frame bias, right, if we check off our overall checklist, right, I call it like a checklist or order flow list. So we have a bullish structure. We're inside of a discount, right? We're inside of a discount with our dealing range, and we're tapping off a fair value gap here, and we previously tapped off a fair value gap. So we know that bullish fair value gaps in the discount are very much in control. So with that being said, now we can now head down to the 15-minute time frame. So on the 15-minute time frame, if we just make this a little bit clear, what we're looking for essentially is our power of 4. So our power of 4 on the crypto is exactly the same as any other market, right? So what we have over here is we have our ICT accumulation. This is the ICT accumulation because it is simply building liquidity. We have an Asian range high, and we have an Asian range low. So what we're looking for is, if we switch on our power of 3 indicator, we're looking for price to sweep the Asian range high followed by the Asian range low. Now think about this. When price takes out this Asian range high like this is manipulation phase 1, right? So this is accumulation. This is manipulation phase 1. We can see price has come above the daily opening price to take out the Asian range high. Now from here, we see price heading lower pretty aggressively. So this was actually a news event. So let's quickly dissect. This was actually a news event that we had. I believe this was 8:30 a.m. Eastern or 1:30 p.m. UK time. Now, news events are notorious for being liquidity aggressive. So what they do is they sweep liquidity very aggressive. And I want people to pay attention to exactly what liquidity pool was actually taken out. So I've often spoken about in other videos that the previous day low sweeps are the most important type of liquidity sweep, right? When you see a news event take out a previous day low and struggle to move downwards, right? So notice how we're below the daily opening price. We've taken out liquidity. This is the previous day low, right? I'm just going to write PDL. This is the previous day low or PDL. PDLs are very, very important liquidity sweeps as well as Asian range high and low liquidity sweeps. So this is essentially our manipulation phase 2. We've taken out the Asian range low. So this is why we call it the power of 4, because the power of 4 starts with accumulation, manipulation phase 1, manipulation phase 2. And now we're looking to catch the distribution. So the distribution target is very, very simple. We simply target the high of day. I'm just going to label this high of day or HOD, right? High of day. Now, once you have this in place, the next thing to look for is simply a 15-minute fair value gap. This is the most important thing, right? So we're looking for a 15-minute fair value gap. So if we just continue to play this on, now price, as you can see, is left a 15-minute fair value gap just in this region. I want traders to understand how I choose my key level. So we have a fair value gap, and this is how I mark out my POIs, right? It's really important you understand this, right? So this is, of course, in gray. Let's just change the color. So this is in gray. And now I want traders to understand we have a fair value gap just resting over there in this region, right? This is our fair value gap. It is always the candle or the series of candles before the bullish fair value gap. This is important to understand. Now that we have this in place, let's just mark this up. So this is our fair value gap resting over here. So what we're looking for now on the 1 minute time frame is we are simply looking for price to head lower, give us order flow confirmation to then take price higher. So we're looking for order flow in this region. Again, what makes this fair value gap high probability is the fact that when we go on to the regular candlestick chart, we can see that price is below this daily opening, right? So the daily opening is over here. Price is securely below the daily opening price, which means we should be looking for buys below the daily opening price. Now from here, we're going to head over to the ATAS platform. We're going to break this down. So on the ATAS platform, we had the exact same candles over here. I mean, this is our fair value gap on the ATAS platform. So the ATAS platform is very good for reading order flow as well as, mixed in with ICT concepts. So what we see over here is the 5 minute time frame. So prices come inside of this fair value gap. So what you're looking for is the interaction between buyers and sellers inside of this fair value gap. So let's quickly break this down. Let's understand what's going on here. So what's super interesting to understand, I want traders to really understand this, right? We had a bullish candle over here and we had a very, very, very large wick. So when a wick comes into a fair value gap, you want to ask yourself, what is going on between buyers and sellers? And it's really interesting, right? So even though we had a green candle over here, I want traders to pay attention to what's going on down here, right? This red rectangle represents a very large seller in the market, right? The reason we see that is because it's representing the delta. So if we just quickly go to settings over here, we go to cluster settings, what you can see here is the delta. So we see the bid and the ask, and we see the delta. The delta is the ask minus the bid. So the delta is giving you the difference between the aggressive buyers and the aggressive sellers. So in this case, when you see a very, very dark red over here, and we also have some other red down here as well, what that means is that there's more aggressive sellers than there are aggressive buyers. So when you see so many aggressive sellers in this region, but they're unable to break this level, because notice how we have a fair value gap over here. But when we dive into the candle specifically, we can see that aggressive sellers are present. But you need to ask yourself, are these aggressive sellers actually being rewarded? Well, if they were being rewarded, price would have driven down and broken this level. But the fair value gap, the 15-minute fair value gap has held. This gives us indication to look for buys because this is a confirmed 15-minute fair value gap. Now, when we head down into this region, this could have been your entry over here. So if we go back to the regular candlestick chart and we go down to the 1 minute time frame, what you're looking for is for the market to give you confirmation. So let's quickly break this down. As you can see over here, let's clear this up. As you can see over here, this was the price action you saw that price actually rejected from, right? So it was here in this region that we saw aggressive sellers trying to drive the price down. But of course they failed, right? We can see that via the footprint charts. They failed in this region. We see aggressive sellers over here. And what's even more interesting, we have a green candle, but we have a huge seller over here. The market is moving up despite aggressive sellers being present. So when you see aggressive sellers being present, you want to think of it as who is being rewarded and who is failing, who is trapped, who is struggling, right? In this case, the sellers are struggling because you see a huge seller over here, but the market is rejecting off a fair value gap, a bullish fair value gap, heading higher despite sellers being present. So when sellers are present, when aggressive sellers are present, but they're not rewarded, it means they're being absorbed by passive buyers, right? That's what's very important to understand. Now from here, we look at the rejection over here in this candle. What's even more interesting is that if we look at this rejection candle over here, look at how perfectly price rejects off this level. There's two things I want you to take away from this, right? Notice how we have a lot of aggressive selling over here, a lot of aggressive selling over here, but none of them were rewarded, right? What's super interesting that we had an aggressive seller over here, very, very red, dark red delta. And we also had an aggressive buyer at the exact same price. So this is obviously Bitcoin futures. 955, right? 95555, right? This is the price where there were aggressive buyers and aggressive sellers. But you want to look at who's being rewarded. So we've come into a bullish fair value gap, right? Notice the sellers at the bottom. These sellers have not been rewarded, which means that sellers are no longer in control. Sellers are aggressive, but they're not in control. This is the most important thing you need to understand, right? Often to see who's in control and therefore see who's buying and selling, you want to ask yourself, who is being aggressive? Who's failing, right? Aggressive failures is what you're looking for. You are looking for the red delta to be absorbed. You're looking for red delta in this case to not be rewarded. And that's what you see over here, because we see aggressive sellers be taken over by aggressive buyers. And we can see lots of sellers over here which rejected. We also see sellers and sellers, but the market is ripping higher and higher. So when we go back to regular candlestick chart, what we can understand, what we can really confirm is that this level is a strong level. Aggressive sellers have failed, which means that by default, buyers are in control, because if sellers are not in control, buyers are the only ones that can win. So now going down here to the 5-minute time frame, let's see how you could have framed an entry, right? An entry could have been framed off here. So what gives this extra confirmation? We have a 5-minute fair value gap. So again, let's quickly go through this trade, right? We are below the daily opening price. We're at a 15-minute fair value gap. The fair value gap is held, and we have a 1-minute over here. And the price action here, aggressive sellers, they fail. And this is what gives you the confirmation to take buys, right? This is kind of how ICT works. This is basically how to confirm your fair value gaps or how to confirm your order flow. So what I would do is I would have entered somewhere around here on this fair value gap. I don't trade Bitcoin myself, but this is just a breakdown for someone. And now from here, a conservative target is always going to be that high of day, right? Always that high of day for a nice 2 to 3 hour trade. Of course, we can, partial out along the way, right? But what I want traders to understand is the 3-step model. Let's quickly go over this 3-step model. So what you're looking for in the 3-step model is very simple. You are looking for a 15-minute fair value gap. You are looking for a 1-minute, or you can use a 5-minute for entry. I prefer the 1-minute. And you're looking for order flow. So in this case, if we kind of draw this out in terms of the buyers and sellers, when price comes into a fair value gap, just like this, right? Price comes into a fair value gap. What you are looking for is you're looking for price to enter the fair value gap, and you're looking for sellers to drive price down, drive price down, drive price down. But of course, they fail, and you're looking to enter upon the aggressive sellers that are failing. This is what confirms the level. Ideally, you want to be below the daily opening price. So just write DO for short. This is the daily opening price, and you're just looking to buy and target this high of the day over here. Once you have your order flow and your basic liquidity, trading becomes really simple, right? And it all comes from understanding the power of what's going on inside of the candles, right? Who is aggressive and who is being rewarded? In this case, I can see for a fact sellers are struggling. Even over here, and down here, sellers are struggling, which means by default, I should be buying because I'm looking to trade with who's in control. I'm not looking to trade who is aggressive. One of the biggest mistakes people make with order flow and trading as a whole, right? So again, if you like this video, give it a like and thumbs up. There is some space in the mentorship for those who are interested. Full course and mentorship, one-on-ones with myself. None of this private Discord live trading nonsense. Just going to be value with myself. So if anyone's interested, feel free to comment below and I'll send you a link for that.